All right, guys, you're living down in Costa Rica. Maybe you need a little extra money to finish your house. Maybe you want to put a pool in. Maybe you want to get a business started and you need some extra money. Can you get it down here? Can you get a loan? You can. I'm going to talk about that in about 30 seconds. Hey, guys, I'm Michael Allen for TravelCostaRicaNow.com. If you haven't subscribed, please do. It's really helpful. And if you want to see videos as we put them up, hit the notification bell. And if you really want to help and hit that algorithm, the YouTube keeps narrowing on me. If you could comment, thumbs up, thumbs down. Michael, I love your white t-shirt. I love Lawson's hat, whatever. All those comments are very helpful. It shows engagement. Guys, we're down in Estoril Este, man, at Sunset Del Mar Resort. We're at the last day of our relocation retreat. And Lawson and his father, Glenn, were presenting at this retreat about getting a loan. An equity loan, and we're going to talk to Lawson about it now. Lawson, thanks for talking to us. I appreciate that. So first of all, just briefly explain what an equity loan is, if they don't know, basically.
Sure. So I'm the operations manager, and I'm the one that's going to be taking your phone
call.
A little bit. So I will be the one talking to both the borrower and the lender.
Wait, stop. I don't want to interrupt, but let's do it this way. I have a house. Maybe a couple 100,000. It's on 1,000 square meters of land here. I own the house. I want to put in a pool and maybe a small cabina to make a little Airbnb, but I don't really have the money for it, but I will, So I'm going to ask you, calling you, can you help me or you can't help me in that situation?
Yes, of course, we could help you.
So how's that work?
The way that it works is we can lend up to 50% of your property's value. So for example, if you had a $200,000 property, and it was free and clear with no liens on it, we'd be able to lend up to $100,000. And that is pretty much our only requirement. There's no credits. There's nothing to do with, residency. As long as you own the property free and clear, then we can provide you a loan up to 50%.
Right. So I'm assuming since it's an equity loan that I'm putting my property up against, if I don't pay, you might be owning my house kind of thing, right?
Yes, so that's correct. The reason why our lenders are interested in these deals and interested in funding your projects is because if anything goes sour, then they can default on your property, which it ensures them that their money is going to go to, good things.
But I'm assuming that they don't really want my property.
No.
They'd have the loan go through, right?
So the good thing about us is that, before COVID, we were able to say that we've never had a single default. Since COVID, there has been a few hiccups, but it kind of comes with the territory. And since then, we haven't had any as well.
So is that the due diligence on your part? So as long as there's no liens against my property, no other issues, and I own it outright, that's about all you really need to get the process going, right?
Yes, and even if you do have, for example, a small lien or you have owner financing that's, maybe near the end, that could be a part of the loan that we could provide to you so that we could become the first place mortgage holders. Or not we, but our lenders would be the ones because we're not the ones that actually have the money. We use lenders, and their money is secured based off being in a first place mortgage.
Now, I think people have seen too many movies a lot of times, and they hear the word loan and money loan and lenders and stuff, and they start thinking bad things about mafia and,
Sure.
It's the interest rate 73% on the, that kind of thing. So I'm assuming the interest rate's probably higher than the norm because you have to protect, you're going to make money. I mean, I don't know why people think that you're just going to give money almost like, sure, just for free, or we're not going to make anything off of it. I mean, this is your business.
Yeah.
So just on average, we don't have to, I'm not asking for like a pinpoint answer, but what's the interest rate?
Sure. So, I think that you're getting into a little bit of loan shark territory. And, I understand
That's what I meant to say. I'm sorry. Loan sharking, yes.
Yes. And so, usually I'm not even familiar with the process, to be honest, but usually it has to do that there isn't any collateral. So when there isn't any collateral, then that's when people can maybe be upset that you're not paying them back because they don't have anything that they can, get their money back from. And so that's when, our collateral is there for our lenders. So our lenders aren't looking to,
break anybody's arm.
Or break any leg.
So everything's contractual. Everything is, if this happens, this happens.
So at the moment of the close is when, the borrower receives the funds as well as the lender is the one put into the first place mortgage position. So if there's any small liens on there, everything is done at once, so it's an even exchange. And so, God forbid you do default on the loan, then they have that backup.
But I've talked to your dad. I mean, he's even said, like, even when like maybe there is a little problem with that payment or a couple payments, you still try to kind of work with them. It's not like you go, oh, you missed a payment, we want your house.
No, exactly.
You do work with them, correct?
Yeah. So first of all, we are looking for people who are looking for a loan that's going to make them money. So, for example, if you wanted to convert, a house into an Airbnb project, maybe you want to knock down some walls, add a few rooms, do something along those lines where you're going to be making money right away. I mean, that perks our ears because we know that you're going to be able to make those interest payments per month. For everything is paid, everything per month is paid by interest. And so, when you're able to make money with our money, then we know that you can pay that off. And it's going to be a smooth transaction.
Can we go a little bit back to the interest rate? Can we get close to maybe what it is?
So on average, we are looking at, it used to be 12%. We are trying to do 12%, but it can go all the way up to 18%. And that all depends on the loan to value, the LTV. So for example, if you have, let's say, $1 million hotel and you're looking to borrow $100,000, that's a very simple loan. If you do default on that, no one's upset, at least from the lender's end. So that allows us to have a lower interest rate. That might be something along the lines of 12%. Now, if you're closer to 50% on that loan to value, then it gets a little bit
riskier,
less interesting to our lenders, right?
Okay. Yeah.
And so that's when, the interest rates start to go up. And that's when it could be, 14, 15, 16%.
So maybe just real quick, say who might be who should look at this as maybe an option for them? You know what I mean? Like who's your, I don't know, I'm trying to ask. Like,
so, I mean, we're looking for really anybody under the sun, as long as you have property, or if you're looking to purchase property, that works as well. As, if, for example, if you can put down 60% on a hotel or even more, 70% even better, then we can help you with that other 40,
okay,
30%,
so even that,
so that you could actually be able to purchase that. And then we know that you're going to be going into business because, we're looking to see that hotel is actually up and running, not that it needs another $1 million for it to get started, because we know that you're going to start making money immediately, based off of.
So it's just not people that just need a pool. I mean, businesses getting going, getting started.
Yes, that's correct. So as long as the property is, up to snuff, ready to go, then that's a very easy loan. We also do construction loans. So for example, if you have your foundation in place, we can do, whatever it may be, 3 or 4 phases where we could pay, let's say, 1/4 of the loan amount so you can get to the next stage. For example, if there's just a foundation, maybe we want to see you have the roof on top. And then on the next phase, maybe we want to see the walls on top. So we could release, let's say, 20,000, 25,000, whatever the number
scheduled, kind of scheduled.
And so as long as you meet, the criteria, the terms are always based off the lenders, but we give our recommendations. But for example, in the first 3 months, if you can get the roof on, then we'll give you the next part so that you can get the walls on, and then you can get the kitchen done, and then you can do the windows and doors, or whatever step that we, negotiate.
Cool. Guys, a lot of times this generates more questions than answers, but if this sounds interesting to you and you want to get a hold of Lawson to ask him some questions, go ahead and email me at info@travelcostaricanow.com and I will get you over to him ASAP. Lawson, thank you very much. I appreciate it. You're kind of a natural. You might want to start your own YouTube channel.
Really? I was super nervous. I've never done this before.
No, we're still on. Hey guys, things are going to pop up. If you're thinking about living or traveling anywhere, always do your homework and research. And if it's got anything to do with Costa Rica, I'm going to put our videos up against anybody's. All right, man. Peace.